G'day viewers, I'm Adam Stokes. Welcome back onto the channel where today we are joined by one of my favourite guests, CJ Konstantinos, who is kicking goals in the crypto space. CJ, thanks for joining us today.
Well, thank you so much for having me, Adam. It's a pleasure to be back. It's been too long.
It has been. I remember when we first met, I found you before you had a YouTube channel and I'm like, man, this guy is going to blow up. And you have. You're doing so well. Congratulations on your continued success. Let's talk about some of your travels recently. You've been going to conferences. What's the feel in the Bitcoin land?
Yeah, it's been amazing, actually. It was going out to Bitcoin Vegas was unbelievable. I'm sure your viewers are familiar with that movie Ready Player One, where you like plug into the internet world. Well, in the regular world, you walk around and nobody knows who you are, nobody cares who you are. But when we went up to Bitcoin conference, even on the flight out there, somebody took a selfie with me, and then we got there. It was like plugging into Ready Player One, and you're in the Bitcoin world. Like all of a sudden, like people who actually want to hear you talk about Bitcoin and like to hear what you have to say about Bitcoin are now coming up to you and saying hi and shaking your hand and taking a picture. And I was overwhelmed. Honestly, it got me so pumped up because it made me realize that a lot of these people that you interact with online, it's different when you look somebody in the eye and you shake their hand and you see them and you know them and you interact with them versus just over the internet. So it made a lot of those relationships that I've curated over the years on Bitcoin Twitter and turned it into reality. And I couldn't be more motivated and energized by all the love we got at the conference. And people are truly excited for what we've built at People's Reserve. I mean, they just know, like, hey, I'm a Bitcoiner like CJ, and CJ faced these problems and he took the time and energy to build a solution to that problem. And now, since I've been a responsible saver of BTC, I'm facing that problem. So I need the solution, and I'm looking forward to that solution coming. So it was a great realization that all the blood, sweat, and tears and time and energy that we've put in over the past years, the whole team, we couldn't be more excited to finally empower responsible savers of Bitcoin and to help you unlock that purchasing power without giving up ownership.
I really wish I had gone, because looking at the footage coming out of that conference, I'm like, wow, this is next level. I've gone to many conferences in Australia, but the one in Vegas, I think it was over 30,000 people. And what was fascinating, even the gold buff Peter Schiff went there, which I thought was pretty funny. And they had him on stage, and it was good to have, I guess, some contrast with the Bitcoin haters or deniers, if you will. But what I want to ask you about that conference, we saw over 30,000 people going. What does that indicate to you? Is it people understanding the technology of Bitcoin, or is it that they're becoming fed up with fiat?
I think it's a combination of both. I think it starts with realizing your problem. Typically, a solution doesn't make sense until you face the problem. So a lot of people, they're in that zone where they're like, "Hey, what's going on here? Since 2020, I've gotten a raise. I've been spending less and saving more, but the home I want is like more out of range of my reach. The bills I'm paying are more expensive. Like, I'm going backwards in life." And that's what Bitcoin is. Bitcoin is a savings technology. It is literally engineered money, strategically designed to leverage the natural laws of economics and price discovery to empower its holder to properly store value, to obey the laws of thermodynamics and store value through space and time. And we've never had anything like it before. It's the only monetary asset that cannot have supply expansion. And because of that, it perfectly stores value. And that solution is probably like becoming, I think, one of the number one solutions in the world, because what's happened, especially since 2020, is that one of the biggest problems in the world has been dilution of fiat currency units. The governments ran into problems. They made bad management decisions. Whether you want to say things were planned or things just happened, it doesn't really matter. What matters is that they continue to spend money that they don't collect in taxes. Those deficits come back on we, the people, and that is a value extraction model. They continuously dilute the fiat currency, spend that currency into circulation, justify it through the trickle down method, because that wealth is supposed to trickle down to you. But in reality, it's a trickle out method. It's about taking little fractions of a penny every single minute from your pocket and hoping you don't realize. But over the course of these 5 years, people now are waking up and they're starting to realize, I have a big problem. I cannot use bills, bonds, and notes and I cannot save in these fiat currencies and get ahead. I'm falling behind, and I'm falling behind at a faster and faster pace. So I think that was really the realization, especially for the people who were at the conference and were relatively new to Bitcoin and were going there to learn. That it was like, how do I utilize Bitcoin? And that first step, of course, is its savings technology. Use it as a savings vehicle. But then, with the advent of the financialization of the asset class, companies like ours, like People's Reserve, are building the financial tools. We've done the financial engineering for the everyday user so that you can get the financial tools you need to take your savings and not have to give up ownership, but unlock that purchasing power to increase your quality of life and standard of living today because of your responsible saving, not sometime far in the future. And the combination of these two ideas coming together, I think, is what has everybody really, really excited. It's what has led the charge on not only Bitcoin's evolution from magic internet money, right? Everybody's like, oh, just magic. You got your magic internet money. Yeah, but it's evolved from magic internet money to digital gold. And now what we talked about years ago, Adam, everybody is admitting. The governments are admitting it. The corporations, the institutions are admitting it. It is going full speed ahead, exactly as we said it would. And we're watching the monetization of the asset class. As usual, you and I are ahead of the curve. We know that as the mainstream is focused on monetization, what's really happening are the tools are being built for financialization. And the financialization is about the evolution from digital gold to pristine collateral. And the financialization of the asset class is going to drive a huge monetary premium into Bitcoin. Right now, Bitcoin is trading at like $100,000, but it's digital gold. And to get on par with gold, it needs to be at $1 million per coin. And once it's at $1 million per coin, then it will realize its financialization potential, which is what we saw happen to real estate. After 71, when they removed gold from backing the dollar, real estate was monetized. After it was monetized, it was financialized. We start to see mortgages, grouping those mortgages together in mortgage-backed securities, home equity lines of credit, all different types of financial tools that let you leverage that asset on your balance sheet. And what happened is that drove massive value, not only here in the United States, but even in Australia, massive value driven into the asset class through its monetization and financialization. Bitcoin is on the brink of that right now. We have just now started the monetization process. It will complete when Bitcoin reaches that digital gold parity at $1 million, and then we'll transition into financialization. So you can imagine today, if you have Bitcoin at $100,000 and we're going to $1 million, that's a 10x just to go through monetization, and then go from monetization through financialization. Even more premium is going to be driven into the asset class. So for people like us who have been waiting for this acceleration moment, for this movement up the S curve of adoption, it is not far away, and we are going into it full speed ahead.
I remember when I first got into crypto, when I first got into Bitcoin, and I was trying to explain Bitcoin to other people, the reaction that I got was a lot of anger. Now, I still get anger with the newbies who are coming into the space who don't know anything about money, and it's nothing against them. It's that they've been denied a financial education. Yeah. Globally, most people don't understand money. I think I mentioned to you before that one of my degrees is in economics, and I didn't even understand money, having, if you will, a formal qualification in it. What I'm seeing now is, as you said, people are starting to come around because they may not understand what's happening with money, but they can feel that they're poorer, that they can feel that they're getting further away from just meeting the baseline. They're working harder, but getting less. People are getting poorer, and they're like, well, actually, what's going on? So now the questions are starting to be asked, and Bitcoin is giving the answers. I want to ask you on your experience when it comes to the emotion of Bitcoin. It's still there, and the emotion is those who are in, it's like, we've seen the light, we're free, we understand the problem, we understand the solution. But with newbies coming in, certainly in my world, I still get a lot of pushback from people who are completely financially illiterate. And what happens is I find that they actually get angry and abusive at me. But I'm trying to understand from your perspective, why do people get so angry at Bitcoin?
Yeah, and that's a great question. I mean, I really don't know. I don't know. It's why are some people evil and why are some people good? There's the spiritual element to Bitcoin, right? There's a spirit. That's why the Bible says that the love of money is the root of all evil. The love of money is the root of all evil. That's a really drastic statement. And when you start to understand that wickedness, spiritual wickedness, is actually tied to a love of money rather than a love of your fellow man, then a lot of this stuff starts to fall in place. I mean, because they look at you and they see jealousy. They look at you and they, they don't want to clock out at work, but they don't understand that you've probably put in all the hours they put in squared, because running your own business is you're working 24/7. You're doing all the work in the background that they think you just sit down, press record and walk away and everything else magically happens. Well, that's not how it happens. You can't even sleep at night without thinking about what comes next. They get to clock in and clock out and go brain dead. And that's really, I think, part of what we're seeing here. I think some people are willing to dedicate the extra time and energy to put in and understand, you know what? I want to make my life better. I want to learn from people who went and made their life better. And when you roll across people like yourself and communities like yours, people should feel like they hit a home run. They should feel like they hit a grand slam. Your community has been one of the most active, supportive community through my growth of me being an absolute nobody on Bitcoin X to actually having a halfway decent following on X, and people actually caring about what is being said because of the value that's being delivered. So being able to recognize that value, embrace that value, and then incorporate it into your understanding so that you can become a better person, that's like the Bitcoin mindset. Opposite of that mindset is the fiat mindset. Opposite of that mindset is the worldly mindset that looks at you, and instead of being happy for you from your success, instead of sitting down and opening up a notebook and taking notes and learning how to get ahead, they just get angry. They just get frustrated. And it's like an emotional reaction instead of a well thought out reaction. And it's an ungrateful reaction rather than a action of wanting to learn, people like yourself and people even in your community who reach out and want to help and say, hey, what about this? And they ask a question and maybe they add something to your opinion that you didn't understand before, you didn't know before because of their life experiences. And that's what I love about the Bitcoin community. The Bitcoin community is almost better than the church community, to be honest. Depending on where you're at, some church communities are more toxic than the Bitcoin community because Bitcoiners want to see you have success. They want to see you learn. They want to see you get ahead. They want to see you escape this system that is really a debt slave system, a system that extracts value from you. Whereas Bitcoin is a system that it really doesn't care who you are, but it also doesn't take your value. It treats you fairly. There is no bias. There are no cantillionaires. Those who deliver value can save Bitcoin because they're delivering value into the economy. And it sets an equal playing ground. And I think some of those people, they don't want an equal playing ground. They want to hit the lottery and then do what the cantillionaires do. They want to exert their power and control over other people rather than focus on lifting other people up. It's really, when Jesus came here, he explained to us that the kingdom of man is upside down and backwards from the kingdom of heaven, right? Jesus came here as the King of Kings and the Lord of Lords, and he washed his disciples' feet. And when Peter said, no, Lord, you're my king, you're my Lord, you're not going to wash my feet. And Jesus said, if you don't let me wash your feet, then you have no part in my kingdom. And Peter said, well, then, Lord, wash every part of me then, because you're my God and you're my king. I want to serve you. But see, in the kingdom of heaven, the greatest of all is the servant of all. But in the kingdom of man, the greatest of all seeks to have servants. And I think there's really that spiritual element to Bitcoin. That's why I call it truth money. It's money that can't be defrauded. It's justice. It's truth in the form of a ledger. And that truth derivative can only become from the one who is the truth. Who is God and who is just. And it's like a spiritual divisiveness that is being revealed by truth money versus fiat fake lie money.
When I listen to Max Kaiser speak, he gives examples or perhaps alludes to Bitcoin being divine. And if you're new in this space, you're like, well, I don't really know what that means. Maybe it's a bit of an exaggeration. But I think you'll like the analogy that I look at Bitcoin with. I see inflation or hyperinflation as the floods coming. And if you will, Bitcoin is the metaphoric ark, Noah's ark. And what we're doing here is we're building this ark and everyone's welcome. And what's also beautiful about this metaphoric ark is that it's big enough for everyone. Anyone can sit on it. All you've got to do is buy a ticket. But here's the thing, the ticket doesn't have to be $100,000. It can be 1 cent. It can be half a cent. Everyone's welcome on this ark. And we can show the floods are coming. We can say, look, this inflation is about to destroy us. It's already, your feet are already starting to get wet. Can't you see that your crops are rotting? Your feet are getting wet. You're losing your furniture. The floods are starting to rise, but it's going to come slow and then bang, hit you in one massive wave. Meanwhile, we're building the life raft of Bitcoin and saying, hey, everyone's welcome on. And people are, well, some are saying, great, I embrace it, I support it as you've described. But others are saying, no, you're stupid, you're an idiot, look at you, you're catastrophizing what's really happening. And it's like, look at your feet, you're getting saturated, the floods are coming, everyone hop on board. But I'm scared, CJ, that it's going to be too late for many of these people. What do you see over in the United States? So we're feeling inflation heavily in Australia, like housing is completely out of the picture for so many Australians. Like, there is no chance for Australians to rent a property, let alone buy a property. The supply is unbelievably small, the demand is unbelievably high, and the purchasing power of the dollar has been decimated. What are you seeing in America when it comes to living standards and the US dollar?
Yeah, well, I could tell you this, the headline consumer price index and the official inflation numbers are nowhere near to the reality. They would like to have you believe that inflation is slowing down, prices are going down. But, depending on your lifestyle, inflation changes. That's what makes it so difficult to understand and to measure. But the reality is that here in the United States, number one, the real estate market is frozen. I mean, there's properties that I've kept an eye on for a long time because they were unaffordable, where I said, hey, maybe when they start raising these rates, maybe these will come down to affordable prices. For instance, there was a property right on the river by where I live, a beautiful property. Not that long ago in 2022, it sold for $7.5 million. And today it's listed on the market for $4.5 million. They just cut it down another 23%, maybe like last week. And that's not just for those types of properties. We're watching all types of property values just fall and fall and fall, because unlike Bitcoin, which is 24/7, 365 liquid, real estate is really only liquid when buyers have purchasing power. And with interest rates being held high, and prices as high as they are with those higher interest rates, the homes are unaffordable. People cannot, like, it's not like it's so bad that people have no extra spending money. So when you have no extra spending money, when you want to upgrade your house or move, you can't, because there's nothing extra to roll into your mortgage payment, especially when the interest rate, the burden of that interest has gone up significant amounts, 30, 40%. There's no way that you can make that extra money, especially as wages are not keeping up with prices. So people are going to work, they're getting these nominal price increases in their wages, but we're getting massive price increases in cost of living. And that is causing the standard of living to tank. And not only for active earners, but also for retirees. When you look at Social Security, the adjustment to Social Security is tied directly to CPI. So CPI is saying that, over the last couple of years, price increases have been like 2%, 4%, 1%, 2%. In reality, price increases are up around, over that time period, 50%. I mean, and I'm not exaggerating. They're up 50%. So when your wages are not going up, or when your retirement distribution from Social Security is not keeping pace, your quality of life and standard of living is crashing, literally crashing. People don't have money for health emergencies. They don't have money for extra spending on the side for their own pleasure. People are barely getting by. And the local restaurants, this is kind of like a second and third order effect. One thing that I've noticed is that when I take out my family, the quality of service has actually gone down, because people are not as in a happy of a mood. Like, even though the dinner's more expensive, they're making more tip money. They're just not happy because they're working harder and they're working longer. And then they're walking away with less benefits. They're walking away with less goods and services in their own lifestyle. So unless you're in the top 1% and you're making, $500,000-$600,000 a year as some executive, getting stock options and great access to credit and the ability to borrow against your land banking assets because you have a real estate portfolio, unless you're in that top percent, even here in the United States, the quality of life and standard of living is absolutely crashing. And it's crashing now to the extent where people's outlook on life and how they treat other people is actually going down. So the overall quality of life and standard of living is going down. And that's not making life as enjoyable. That's making life more dangerous, less secure, more expensive on all fronts, from the medical, from food to pleasure to even sporting events. I mean, people can't even afford to take their kids over to watch a baseball game anymore. I took the kids to see the monster trucks in Tampa Bay Stadium, and it was $60 to park my car. I'm like, are you $60 to park my car? Like,
Wow.
I mean, just to park my car. I'm like, this is unbelievable. And we got a good deal on the tickets because we got coupons, and the parking was like almost like a third of the price of the actual tickets. So I'm like, and then you got to pay for the gas to get there and back. So it's just like people being able to use to do something, like you look forward to the weekend, right? Like, hey, I worked really hard this weekend. Let's do something fun with the kids, babe. Let's go do something. And even if it's something small, even if it's just going out and getting some ice cream, those are the types of things you can't do anymore, because even going out and getting ice cream for a family of 5 costs $50, $60. And it's just like, it's unbelievable. $50, $60 can pay for a whole meal. Now you have to like skip that meal just to go get ice cream. I mean, that's how bad it's getting here in the United States. And, I'm in Florida. So it does change between different states. But like you said, I've been traveling around a lot for different conferences. I've seen the different cities. And I think in Florida, we actually have it a little bit better. So if it's this bad in Florida, I know that it's just as bad, if not even worse, in other parts of the country.
Mate, that's powerful stuff. And we're feeling the same in Australia. So, example, movie theatres. I remember going to the movies when I was a kid. I can't remember the last time I've been to the movies. On one hand, the movies I think are very low quality and just very woke. On the other hand, people can't afford to take out a small loan to take their kids to the movies, which actually then links to shrinking population. I looked at a post recently about population growth or reproductivity rates around the world. And throughout the West, we are just falling off a cliff. No one is really reproducing. And in Australia, the way we tolerate this or deal with it is we import a lot of people. So we have mass immigration here. And it's kind of a triple effect that you have a very short supply of housing, you have a massive influx of new people, but then you have a weakening dollar, and everyone's in a world of hurt. There's extreme stress we can certainly see in Australia. A lot of people are living on the streets. One thing I've really noticed, CJ, is when I'm walking around the centre of a city, any capital city in Australia, not only do I see more homelessness, but it's the first time I've seen female homelessness. I always associated, wrongly or rightly, if you will, older men living on the street. Now it's completely diverse, where you have men, women, young and old. So clearly this is not discriminating against anyone. And this is where we bring it back to what is the core issue. And there's so many people who believe it was Russia, it was Ukraine, it was Trump, it was China. And it's like, no. The layer 1 to life, I would argue layer 0 is energy, because without energy, nothing's really happening. But to the layer 1 to everything we're doing in the modern world is, of course, money. Whether you want to support your church, support your sporting team, support your family, go to the movies, you need money for all of it. But when the layer 1 to life is broken, my friend, nothing seems to work. This leads me into the US dollar versus Bitcoin or vice versa. We can see arguably 4 main contenders on the stage, depending who you're asking. So you've got the US dollar, you've got gold, you've got Bitcoin, and you've got the CBDCs. Now, a caveat of the CBDCs, I'd say BRICS as well. So BRICS is, I would argue, is a kind of a CBDC in the sense that it's still centralized by a government. So looking at these 4 competitors, Bitcoin, gold, US dollar, and CBDC/BRICS, how's it going to play out?
Yeah, I'm just thanking the Lord that BRICS chose gold. I mean, they really left the door open for us to embrace Bitcoin and take the lead, not only in global finance, but in the internet economy, because that's where everything is shifting. Everything is shifting digital. Over the years, things have shifted from the storefronts into the internet stores. And the internet economy, this digital economy, number one, it's the only economy in the world that has no debt, because there's no central issuer. So when you think about it, it's like, oh, that's interesting. Like, yeah, there's nobody that can take out debt on behalf of the internet economy. So it's literally just this domain, this marketplace that is debt free. And then second of all, in the internet economy, because it's an aggregate economy of the world, no one country can control it or can outcompete it. And then because no one country can control it, the leader of the internet economy is always leading with like free market principles. So I think BRICS embracing gold, and obviously China making deals with the Middle East for oil. They just opened up a gold warehouse in Hong Kong for the first time ever, where you could trade paper currency notes for gold. So when they buy the oil from the Saudis can take the paper and get the gold if they want. So that's a really interesting correlation, and in my opinion, no doubt one of the main drivers of gold's performance over these past years. But it's just wild to me to think that you go from the natural to the engineered, right? We have like the natural world, and then we've engineered this digital world, the Ready Player One world, and you can plug into this world, and it's there's always benefits to it. And when I look at this, like, let's go from natural to engineering. This is what's so amazing about like humanity. We were created in the image of God, who is a creator. Therefore, we can create. So what do? We create to transform the natural to the engineered. Well, we have the natural fire, and that used to be our source of light. But then we engineered the light bulb, right? We have natural strength in horses, but then we get the horsepower in the engine. So we engineered horsepower in the engine to get a massive, brutal strength. And then we have like this natural money, which is gold. And what makes it natural? Well, it's hard to find. It's hard to increase the supply. It's hard to defraud. It's a more secure form of barter and medium of exchange. But it's still natural. But now we have the engineered, and that's Bitcoin. And Bitcoin has an engineered money. And it's funny you mentioned Peter Schiff earlier, because when I was at the Bitcoin conference, I talked with Peter for like a solid 15 minutes. I even took a selfie with him.
Wow.
And we talked about
How did that go?
Oh, it was great. You know, he's actually a really nice guy, because
Yeah.
you know, we're just there at we were at the Bitcoin Magazine 250th celebration of USA. And, you know, he's hanging around with his friends, and he just has a 15-minute conversation with me, a random guy that he never met before, but a longtime fan and listener of his show, who's received a lot of that, regardless of his opinions on Bitcoin. I've learned a lot about economics through his opinions and taking deep dives like that. So always grateful for the time and energy he puts out to share his opinion. And that's the best way to do it, right? Find people who deliver value and pick a little bit of a piece of what you like from them and what you like from this guy, and then have your own thoughts, have your own opinions, have your own thesis, and then build from there. So it was great to be able to talk with him. And I talked with him about this: gold secured by its cost of production, right? Like the reason gold has secured value so much over time is because the more and more they print the fiat currency units and dilute the supply, the more and more the costs that the gold miners have to pay in terms of those currency units to rip the gold out of the ground and bring it to the marketplace. And a business can't stay in business if they sell the gold for less than it costs them to rip it out of the ground. So as the cost for them to rip it out of the ground and supply it to the marketplace goes up, the price they have to ask of the market to benefit from the value proposition of that good or service, in this case gold, has to go up. So for thousands of years, this process has worked and been confirmed in the natural price discovery process. But here comes along Bitcoin. Bitcoin is the only asset in the world that has the ability to adjust its cost of production. It adjusts its cost of production when we have a halving. When we have a halving, cost of production, boom, doubles right overnight. Well, it also adjusts its cost every 2 weeks, or 2016 blocks. We call it the difficulty adjustment. And if the hash rate is going up and blocks are being mined in a faster than a 10-minute pace, difficulty goes up, cost of production goes up. Now the miners need to ask the marketplace for a higher price to remain profitable. And of course, if they weren't profitable, profit being the invisible hand that drives the marketplace, hash rate would be shrinking, not growing. So people vote with their money. And when a Bitcoin miner asks for a higher price because their cost has gone up, you are voting yes. You're saying the value proposition of this truth ledger in a world of lies, yes, it's worth this price. Absolutely. And as it keeps going up, it keeps becoming more and more worth it, because the problem keeps getting worse and worse, not better and better. So the value proposition of Bitcoin continues to climb. And through this price discovery process, there are engineered components in Bitcoin that allow it to outperform gold. Gold will go up in value as fiat currency units are devalued. But Bitcoin will go up in value not only because fiat currency units are devalued, but also because of the halving, also because of the difficulty adjustment, and also because there's only 21 million, and that means absolute digital scarcity. So if demand goes up, there's no way to increase supply. as the price of gold goes up because demand goes up, they can rip the gold out faster from the ground. The inflation rate of gold will continue to go up. There is no inflation rate of Bitcoin. There's an issuance schedule, there's an issuance rate, but there's no inflation rate. There's 21 million, and that's it. So between the halving difficulty adjustment and absolute digital scarcity, we have an engineered solution. We have a savings technology that is going to allow us to get ahead and is going to shield us and protect us from the massive dilution that comes with fiat currency. And it's going to do it the same way a light bulb does a much better job of giving light than a fire. It's going to do it the same way an engine delivers horsepower way better than a whole bunch of horses strung together with ropes. It's the engineered, it's the optimized version of what happens in the natural. And people need to embrace that. And for BRICS to go and take gold and start to accumulate gold and try to back their BRICS currency or their central bank digital currency, like you said, that comes along with a credit score. So if you say something bad, you can't fly on a plane or take the bus. That is not the future that I want to live in. And that is not a free world future. So the United States has been blessed. We have the ability to stand up, embrace Bitcoin, integrate it into our systems. We don't just need the strategic Bitcoin reserve. We need the Bitcoin recapitalization fund. We need to put Bitcoin into our fiscal, monetary, and economic policies. And we need to do it immediately, because every extra second we wait gives somebody else the chance to step up and take the lead. And the internet economy is going to embrace a leader that leads by example, not by force. There's no way to lead by force in the internet economy. You must lead by example. And the United States has a chance to embrace Bitcoin, integrate Bitcoin, be empowered by this engineered money, and maintain that power and control for another 150 years, for another 250 years, because that power and control also comes with freedom. And that's what people really want to embrace, a way to embrace freedom without physically fighting. And Bitcoin is the peaceful revolution. It's the way we vote with our money. It's probably the only vote that we have that actually really counts. You vote with your money and it for sure counts. And if you vote for Bitcoin, that's a vote for peace. And that's the future I want to live in.
Beautiful and powerful words there, CJ. It really makes me wonder if our political leaders understand it. So I've been going through a phase, if you will, on this channel where I've been interviewing a lot of Australian politicians. It's been very interesting, shall we say?
Because, by the way, congratulations. I saw one of those got over 100,000 views. That was fantastic.
Thank you. Yeah, and you know what it shows me? It shows me that the market is hungry to hear what our leaders have to say. They want to get the long-form content as opposed to just a snippet from the mainstream centralized sponsored media that says, right, get this little clip here and throw it on mainstream. What they want to hear is they want to hear more in-depth conversation from those who are leading this country. And I guess the frustration I have is that there seem to be some very good leaders here, but they haven't quite made the connection with Bitcoin. They don't quite understand. And it really makes me wonder, is it that they truly believe in the dollar, whether it's the Australian dollar or the US dollar, essentially a fiat, or is it they don't understand the scam of inflation where they keep printing it, or do they understand it but they just embrace it? Or is it they don't understand Bitcoin? My confusion is, CJ, is when it comes to our political leaders, I'll push it back to the United States. We can see Donald Trump has adopted a Bitcoin strategic reserve. What we haven't yet seen is any purchasing of Bitcoin yet. I understand he wants to do it in a neutral manner. What I also see is, of course, the United States wants to maintain its power, which is perfectly logical. And part of maintaining that power is having a big military, and part of running that military is funding it. And part of funding it, you see it all connects together, is you need money to do that. And where do you get the money from? Well, essentially you print the money. Sure, you can create value in certain parts of the market, but the US debt is now nearly at 38 trillion US dollars. The big beautiful bill looks like it's going to add at least $4 trillion to that, on top of business as usual, on top of interest payments. My question to you, CJ, is does Donald Trump understand the transition from the US dollar to Bitcoin, or is he really going on perhaps the advice of his kids and his advisors around him, who's like, yeah, you need to embrace this now, because if you miss out, our enemy's going to get it?
Yeah, that's a fantastic question. And I honestly, I have to disclaim my answer and say, I've never met Donald Trump, even though I'd love to. So I really don't know the answer to that question. And I'm judging him. Maybe this is not a righteous judgment because I haven't had this conversation with him, but I do think it makes sense because he's putting his money where his mouth is. We vote with our money, right? So his family, they've been debanked. They understand that when the banking system is used against you and leveraged against you, he's been debanked. And then they understand that investing in the World Liberty Finance platform to make everyday DeFi easier for the everyday person. The launching of the USD1 stablecoin, which, by the way, very few people in this industry anticipated Donald Trump to launch a stablecoin months, maybe even six months or more before he launched that stablecoin. I said the next thing you'll see from Donald Trump is a stablecoin. And here today we have USD1. So I think he does understand it. He's not financially illiterate. He's actually financially savvy, and he's dealt with the bankers. He renegotiated when he went through his bankruptcies, he renegotiated those debts and then still ended up on top. Most people go through bankruptcy, they start over, the bank wins, not the person who was claiming bankruptcy. So for him to go through that and keep his assets and restructure his debts shows that he has a certain level of financial sophistication. Put on top of that, that his family is investing hundreds of millions of dollars into the Bitcoin narrative, the cryptocurrency space, stablecoins included. You have to think that he understands it a little bit better. And this is where it comes back to politics. This is why I hate politics. Politicians aren't allowed to be upfront and honest because they have to try to, and it's part of the job. It's not that they are not upfront and honest, although I do think most politicians are not upfront and honest for sure. But even Donald Trump, who I think has no reason to not be upfront and honest, still finds himself in a position where he can't be upfront and honest. Like the 2016 Donald Trump would talk to Hillary Clinton and be like, you should be in jail. And that's why people fell in love with him, because it was brutal honesty. It was honesty and justice within his speaking. But now he has kind of put on that little bit of more of that political role. And the justification is this: look, I can't accomplish things. I can't pass laws and change the way things are if these people hate me for speaking with radical. I can still believe radical, but I can't speak radical. So I have to mute my speaking. I have to cage myself in order to get these people to vote for me. Because if I say one wrong thing, then this group of people isn't going to vote and we're not going to pass this law. And that is honestly, like, that is what I hate about politics. But you go back and you look in history, Marcus Aurelius and all of the best leaders that there were, they were great politicians. They never moved an inch on what they believed, but they were able to make other people think that they believed like them so that they could accomplish their goal. And I think that's what we see here. I think Donald Trump is very stubborn, and I think that's a good thing, because I think he knows what he knows and he believes what he believes, and he's not going to sway back and forth with every wind of doctrine. That's good. That's a good characteristic of a leader who can get the job done. But he has to play politics. He absolutely has to play politics if he wants to have a chance of getting his executive order of a strategic Bitcoin reserve to be legislated into law. There's no way that the strategic Bitcoin reserve is going to become law if Donald Trump doesn't vocally concede. Like, even if he doesn't concede in his personal mind and beliefs, he has to vocally concede in order to get those people to vote to get this into law. We're seeing it right now with the stablecoin legislation. Most people in the government do not understand that the demand on treasuries is waning. A couple of years ago, I spoke with Byron Donalds at the Bitcoin Energy Summit. We sat on a panel together. After the panel, I said, Byron, so, tell me the truth. Like, what's going on? He goes, you wouldn't even believe it, man. He sits on at that time, he sat on the Financial Services Committee, and he told me, we are talking about lack of demand on U.S. treasuries. So at the highest level in the country, for the people whose job it is to keep their eye on financial services and the financial status of the country, they were talking about lack of demand on treasuries. So the problem is people don't want to buy the treasuries. They're being diluted too quickly. Here's this fast approaching solution called stablecoins, where the stablecoins need to be backed by the debt. So in order to issue the stablecoin, you can't just back it with Bitcoin, because people will find a way to manipulate the system to get the Bitcoin, because the Bitcoin is a much better reserve asset than a cash equivalent. So yeah, and here you go. You see the stablecoin market is absolutely exploding. I saw that Deribit is going to take BlackRock's tokenized treasury token as a form of collateral. The treasury market is actually being tokenized, and there's a few reasons for this, actually, and this is one of the reasons People's Reserve has a stable coin. We call it PRUSD. What happens when you are a company or a business and you buy a cash equivalent. Like you take excess revenues and you buy a cash equivalent because number one, it creates yield. Number two, it's supposed to be a store of value, but it's not. So we have a big problem because the rate of dilution, the rate of inflation is outpacing the yield that you're being paid for holding the cash equivalent. So we need to find a way to double that up. We need to find a way to increase that yield. Well, how do you do that? You take the cash equivalent, you keep it on your balance sheet as an asset. It's earning the 4.5%. And then you issue a stable coin. You issue a circulating liability backed by the corresponding cash equivalent asset. And then you take that stable coin and you plug it into the internet economy. You plug it into the decentralized finance world, and then you earn more yield. And you don't have to take risk with that. I mean, these are paid yields. If you have $1 billion of treasuries on your balance sheet, and then you create 1 billion stable coins. So you have a 1-to-1 backed stable coin. You have $1 billion earning 4.5%. Then you have your liabilities. You have $1 billion. You take $500 million and you buy Tether. You take $500 million and you buy USDC. You go to Uniswap. You go on Solana, you go on Avalanche, you go to these decentralized exchanges in these different ecosystems, and you provide dollar-to-dollar liquidity. So there's no impermanent loss based on the token value because the dollar's worth $1 all the time. So now all of a sudden you start earning fees on this. Every time there's a swap within the internet economy, if that liquidity pool is a source of liquidity to facilitate that swap, you're earning a fee. So now you have the $1 billion on the asset side of your balance sheet earning 4.5%. Then you have $1 billion on the liability side of your balance sheet, earning another 4.5% as a liquidity provider in the decentralized internet economy. Well, now all of a sudden, the person who issued a stablecoin, the entity who issued a stablecoin, is outperforming the company or the corporation or the business that only holds the cash equivalent, because the company that's only holding the cash equivalent is only getting 4.5%. But the company who issued the stablecoin, and this is why JP Morgan is talking about stablecoins. Right, we all know Jamie Dimon hates Bitcoin. He hates the internet economy, but they're going to launch a stable coin. Why? Because they can't sit on the sidelines earning 4.5% while BlackRock and competitors are launching stable coins, which unlock the liability side of their balance sheet to earn another 4.5%. If he doesn't earn 8 or 9% like they are, he's going to fall behind. His business is going to lose. So it's the power of economic incentives which is driving this stablecoin growth. And a lot of people don't understand that dynamic, but it's the free market interest rates of the internet economy. It's the non-stated, non-anchored yield curve of the internet economy that is creating demand to issue these liabilities and plug these liabilities into this economy where there is no centralized entity telling you the price of money. If they can't tell you the price of milk and the price of eggs, well, you can't allow them to tell you the price of money because money is 50% of the transaction when you buy the milk or buy the eggs. So if they can tell you the price of money, if they can state the price of money, they are controlling prices. So you can't allow for price controls because it suppresses yields. And that's what's happened. Yields have been suppressed. They had to artificially raise the yields. The yields aren't even high enough because the amount of dilution. These entities are forced to create the liability off that corresponding asset to maximize yields, to make sure that the yield that they're earning on the asset and liability outpaces the real rate of dilution, the real rate of inflation. Otherwise, you're losing in real terms. And the whole world of banking is opening up to it. And I just think most people are ignoring it. It's gonna continue to explode. And it's going to be a good thing for the United States. It's going to be a good thing for the dollar because it's going to create demand on dollars. And that's what we're missing right now. We're missing demand because of that massive dilution. And stablecoins provide that solution.
Isn't it fascinating? So stablecoins in theory, they're so simple. It is backed by $1, 1-to-1. I was listening to a talk from the Tether founder recently, and he was saying the reason why they built Tether originally was so traders could move value from one exchange to another. Then it kind of morphed into those, once you're in an exchange, you could go in and out of the markets whilst you're trading without coming completely out of the crypto land. But now we can see that it morphed to the world using stablecoins instead of Western Union as an example, just moving value around the world without the volatility of crypto. But now you can see it's morphed into, in fact, well, it can be a tool to prop up the US dollar And then that morphed into, in fact, well, beyond buying treasuries with the money put into stablecoins, as you mentioned, banks are now getting into this game because there's a lot of money in it. So it just makes me think, CJ, there are so many cryptos out there. I think we've got over 2 million at time of recording, even more if we go into all the meme coins. And some of the very complicated coins, although they've got a very impressive back end, they're not getting the market involved in it because maybe that market doesn't need it yet or the market doesn't understand it. But when it comes to Bitcoin, protect yourself from inflation in the simplest terms, store your real value without any interference from a third party. That makes sense. When it comes to stablecoins, what it does, it makes sense. We can see at time of recording, my friend, the market cap of all stablecoins is $238.41 billion. The monthly transaction volume is 2.85 trillion US dollars in the monthly volume transfer. So this economy is moving very quickly. The question I have for you, CJ, when it comes to stablecoins, two-part question. One, if we've got all these different stablecoins, are they going to interact with each other seamlessly? I'll do a simple example. Tether with the USDC. Can they talk to each other and exchange with each other, noting that they're both pegged to the US dollar? And the second part to this question is, noting now the world is really moving to stablecoins for so many reasons, does XRP, if you have an opinion, have a use case anymore?
Yeah. So the first thing is that always the stable coins will be able to talk to each other, and it always comes down to counterparty risk. So as a user of the stable coin, you want to choose who your counterparty is and then what the asset side of the balance sheet that back those circulating stablecoin liabilities look like. So for Tether, for instance, and I'm a longtime user and big fan of Tether, and nobody should infer anything from what I'm about to say. But when you look at their attestation, you can see that a little bit of Tether is backed by Bitcoin. A little bit of Tether is backed by precious metals. A little bit of Tether is backed by commercial debt. And then a lot of Tether is backed by U.S. cash equivalents like bills, notes, and bonds, even some repo market products. So there's a good span of different types of assets that back those liabilities when you look at Tether. And I think they're doing it right. I think they're optimizing. And look, Tether's got like 100 employees, and they're one of the most profitable companies in the world. So if you were to measure somebody by profit, then nobody's doing it better. And then you look at something like USDC and you say, okay, here's USDC. You got Circle. Circle just IPO'd. They're regulated. It's 1-to-1, but it's 1-to-1 with US dollars and US cash equivalents. There is no Bitcoin. There is no precious metals. There are no commercial debts. And, Tether is also actively, aggressively accumulating Bitcoin, and USDC is not. So it just depends on what you think is a more secure counterparty where if something was going to go wrong. But this is what makes DeFi so powerful. Of course, all the different stablecoins are going to be able to communicate with each other. And when you go back to the free banking era, this is why it failed. In the old days, banks would issue their own currencies, but they couldn't communicate with each other. So imagine a Forex market within a Forex market, because you had JP Morgan dollars, Bank of America dollars, Citibank dollars. So you had a Forex market within the dollar market relative to the euro or relative to the pound or whatever other currency you're comparing it to. So this added level of complexity really led to a massive failure. That and expanding liabilities beyond assets. But now in today's world, where we know that the Genius Act, which was just passed by the U.S. Senate today, so it has a few more hoops to jump through, but it requires the stablecoin to be backed 1-to-1 with U.S. dollars or U.S. cash equivalents if you're U.S. based. So what that means is these dollars are going to be on equal playing ground, because it's not going to be backed by the assets of the bank. It's actually going to be backed by a specifically dedicated asset that is a US dollar or cash equivalent meant to back that liability 1-to-1. So the stable coins, if they're from an issuer in the United States, will be on a level playing field. And then on top of it, we talk about the different ecosystems. So if you're talking about Ethereum, you're going to have ERC20 contracts that communicate with each other. And then you're going to have DeFi contracts like a Uniswap liquidity pool. And you're going to have different lending protocols like a Maker or that let you mint a stable coin, or an Aave who let you borrow against and collateralize, and you can borrow a stable coin. So yeah, everything is communicating with each other through this smart contract infrastructure. And this is what we didn't have in the free banking area. There was no smart contract infrastructure in the free banking area, which I think played a big role in its failure, that and the abuse of the system. But with the stable coins, if we get regulation that requires one-to-one backing, and then we have that entire ecosystem integrated into a smart contract infrastructure, even cross-chain infrastructure. So, you can get onto Avalanche, you can get onto Solana, you can get onto an Ethereum L2. You have all these different methods that can kind of become compatible with each other and integrate with each other. Yeah, I think the stable coins are going to perfectly communicate with each other, and it's going to be a wild future where issuers actually maintain a one-to-one reserve so that they are a trusted counterparty. And then what's great about it is the freedom that comes with it. So a lot of people are like, stable coins are the central bank digital currency. Here's why I don't believe that, because my bank deposit is the central bank digital currency. That's the one that they can create out of thin air. That's the one that's backed by a penny to 10 cents. So one thing I told Byron, I said, Byron, please bring this up in the Financial Services Committee. And if you want me to come testify or talk about it, I'd be more than happy to. But I think you guys here are bringing in a Trojan horse. This is not just because it solves the demand problem doesn't mean there aren't second and third order effects of this. It's like a software. If you change one line of code to fix something, it might mess up everything else. Well, people should think about this. What is the market going to decide when they have a choice between a one-to-one, a fully reserved, 100% collateralized stablecoin that you have access to 24/7 without anybody's permission? You can literally be your own bank on Sunday afternoon. You can send it across the world. It'll settle in a couple, depending on what chain you're using, it could settle in a couple of seconds. And you have no limit to how much you can send or how much you can redeem or how much you can mint or how much you can burn. Compare that to what the banks offer. Compare that to a bank deposit that's backed by a penny to 10 cents. Compare that to a bank deposit that you're not allowed to go to the bank on Sunday to get your money. And then when you go on Monday and you want more than $10,000, you got to ask for permission. You have to schedule a day to come back because we can't give you that much cash. Cash isn't in the system to support it anyway. They got to get it shipped there so they can give it to you. There's a lot of security concerns. I think stable coins, I always thought Bitcoin would be the Trojan horse that brings down central banking. But when you look on it, and I think banking takes a bad rap for this, there's actually nothing wrong with banking. Banking, I think, is a net positive. Financial tools are a net positive. What's bad is fractional reserve practices. So banks that practice fractional reserves, that's where the problems come in. When you can create circulating credit that's backed by promise and backed by nothing versus a fully collateralized and fully secured liability that's backed fully by an asset. So if everybody came in and turned in their USDC at one time, everybody could get back $1 because they have the cash equivalent value of that. So you might not be able to get it that second because maybe it's a treasury bill and it needs 30 days to mature at its full principal value. Okay, well, in 30 days, you get that full value back, right? It's not like the banks where they bought bonds that were 30 years because they were forced out the yield curve to try to create any type of profitability in their custodial arbitrage model. And then interest rates go up, the market value goes down, people want to move their money out of the bank. The Fed needs to create the bank term funding program because the mark-to-market value is far below, the asset value is far below the liabilities that are coming in and being claimed against it. So I always thought Bitcoin would reveal that, but it's actually stable coins because the problem isn't with the banking. The problem is with fractional reserves. And stable coins are not fractionally reserved. They're fully reserved one-to-one. And anybody, any economist or any businessman who said, well, that model will never work. You can't make money off of that model. You need the ability to just print circulating credit because that's how you make money. Tether's one of the most profitable companies in the world. And all they do is have a one-to-one backed, fully reserved stable coin. So I think, if in the United States we have a choice, and around the world we have the choice to put your money on deposit with the bank, where it can be backed by a penny to 10 cents if you're lucky, versus to put your money in a stable coin, which is backed one-to-one with cash or cash equivalent, which you have 24/7 access to, and you don't have to ask permission of anybody to move it. That's a much better value proposition than a bank deposit. So stable coins to me are a Trojan horse to the fractional reserve banking business model. And I think that's probably one of the best things to happen for humanity in a long time. Now, it's not as good as Bitcoin because Bitcoin gets rid of it doesn't give you the ability to expand supply no matter what. You can still create more cash equivalents to back the stable coins and create dilution. Stable coins don't protect you from inflation. If you hold your wealth in stable coins, you're still having value extracted from you because the cash equivalent supply is still expanding rapidly through deficit budget spending. So only Bitcoin can protect you from inflation. But when you combine Bitcoin and stable coins together, this is where the magic really happens. And that's what People's Reserve is all about. We believe the best Bitcoin L2 are stable coins. The best way to spend your Bitcoin is to borrow dollars against your Bitcoin. Because what happens is when you can unlock the purchasing power of your savings that you have in Bitcoin without giving up ownership, because you're spending the value of that Bitcoin with borrowed dollars. And then over time, Bitcoin does what was engineered to do. It accrues value over time. So the burden of your debt doesn't grow over time. It actually shrinks over time. If you post $100,000 worth of Bitcoin and you borrow $50,000 against it to buy a work truck, and then you use that work truck to create cash flow, well, in a typical loan, you'd have to make back that money pretty quick in order to not rack up interest too fast. But what if your business slows down? Well, in a Bitcoin world and tools with like we build at People's Reserve, you post the Bitcoin as collateral, you borrow 50,000 against it, your business slows down, so cash flows slow down, but the value of Bitcoin continues to go up. With a 5-year CAGR of 60%, in 5 years, your $50,000 of Bitcoin, your $100,000 of Bitcoin collateral is worth $1 million. And your $50,000 debt against $100,000 is a little bit scary, but $50,000 debt against $1 million worth of collateral, basically Bitcoin deleveraged you. Bitcoin is an auto deleveraging mechanism when used as collateral. It's why we call it a pristine collateral. And that's what the world we're heading into. Save in Bitcoin, spend in dollars, or I should say save in Bitcoin, spend in stable coins. And when you do that, you become the cantillionaire. You become the person who can print purchasing power, and you can do it without giving up ownership of the most valuable asset in the world.
It's so logical to me to hold an appreciating asset and get rid of the depreciating asset, save in Bitcoin and spend in dollars or spend in stable coins. I want to dive a little bit into your company. I'm cognizant of your time, but before we do, I'm still trying to make the connection with XRP in this. My opinion is this, and I could be wrong. I speak from a position of ignorance. When XRP was created or Ripple was founded and the XRP token for it, it was for cross-border payments and huge liquidity pools that could move money across borders with little friction, with access to liquidity, with low transaction fees, and that all made perfect sense. But then stablecoins came along. And what we can see now is that the world seems to be embracing stablecoins, and at the same time, Ripple itself has made its own stablecoin. So where does Ripple fit into this whole equation?
Yeah, I mean, my personal belief is this. There is no reason for crypto to exist if it's trying to compete with Bitcoin. Crypto should only exist if it's there to complement Bitcoin, to help evolve Bitcoin from digital gold to pristine collateral. So when you look at a lot of DeFi, like in Aave, for instance, Aave is about using your Bitcoin as collateral. You can, and MakerDAO as well. You can mint stable coins. You're borrowing against your Bitcoin. It's evolving it from digital gold to pristine collateral. And that's the key element there. The crypto must exist to complement Bitcoin, not to compete with it. And in my opinion, I think Ripple has, for whatever reason, put themselves in a position where they want to compete with Bitcoin. It's almost like ETH. Like everybody knows that ETH is there to complement Bitcoin. Everybody who's been there from the beginning knows that it was only ever to complement Bitcoin. Heck, maybe if it was even a little of a bit of a test net for Bitcoin, to be honest. But it was never meant to compete with Bitcoin. So this narrative they have today, where they're sound money competing with Bitcoin, that is just a self-destructive narrative, because Bitcoin is money. It's the first discovery of money. It's engineered money. It's proof of work. We don't need anything else. We got it. We found it. It's here. It's engine. It's like someone comes up with an engine, and now they try to make the engine a little bit better. And maybe you can do a little things here and there, but the overall dynamic, the overall systems engineering stays the same. The engine is the engine, and there's only one creator of the engine, and maybe it gets optimized over time. But that's what Bitcoin, we have the ability to do that through a consensus mechanism. You can optimize little bits and pieces here or there over time. So I see Ripple, especially with the people who are at Ripple, leading a charge against Bitcoin's narrative. I mean, I know they funded Greenpeace to create that big piece of art that showed that Bitcoin was destroying the world and miners were burning the oceans. They supported the narrative of switching Bitcoin from proof of work to proof of stake. I mean, and it's just, I don't understand why you want to compete with Bitcoin. I think if you compete with Bitcoin, you don't really understand what's going on here. Everything should be about complementing Bitcoin. Everything should be about empowering responsible savers of Bitcoin. And if XRP embraced that mindset, I think they would actually do better. I think that they would have a better outlook versus trying to compete as a settlement layer. I envision a future where we have a true free market yield curve where things are priced in sats and settled on the Bitcoin network. And if people are trying to get in the way of that, yeah, there it is right there. And it backfired on them, right? Like they financed this, they tried to create this narrative, and then we all embraced it. We're like, this is great. Actually, at the Bitcoin Vegas conference, they had that there. And me and my team took a picture next to it. So it's like the Statue of Liberty for Bitcoiners. It's like, they're trying to tell a lie about who we are, but in reality, by embracing the lie and encouraging due diligence, that due diligence revealed that the opposite of that narrative was true. And that's why I'm not a fan of what's going on over there, because I think that they're not pushing the true and right narrative, and they have the means to do so. They have the means to push the true and right narrative. And if I played any role in that network or chain, I would tell them that they should be calling out Ethereum, not Bitcoin. They should do a complete 180 and support Bitcoin and try to get people to bridge their Bitcoin onto Ripple so that you can have settlement on Ripple. And so that Ripple becomes a settlement network that complements Bitcoin, that helps evolve Bitcoin from digital gold to pristine collateral, so it can be plugged into different DeFi protocols. And then they should call out ETH for slow transactions, expensive gas, for trying to become a hard money instead of a system. ETH creates friction, and XRP can lessen that friction, can make it more smooth and more simple. But instead, they embrace this combative mindset where, they're the best and there's no need for anything else. And that's just not true, because Ripple is not engineered money. Ripple is a centralized coin that was created by a centralized issuer. It requires no proof of work, and therefore it's a different type of asset. When you look at Michael Saylor's digital asset framework, people really need to go see Michael Saylor. I believe he knows what he's talking about. I've been with him. My split adjusted price on MicroStrategy is $27. Been with him for a while. But his digital asset framework is actually really important. And Bitcoin is a digital commodity. It's secured by digital power through proof of work and through its engineered design. And it's in a league of its own. It's in a class of its own. That's why it is the reserve asset of the internet economy. But then Michael also says, hey, I don't think we're moving into a world where, Bitcoin is trading for $10 million and a group of 13 men are still telling us what the price of money is. And a group of 24 men are telling us whether or not a company can raise money from public markets. I see, speaking from Michael's perspective in his digital asset framework, he goes, I see a world where we have digital commodity, Bitcoin, secured by digital power, but we also have digital securities. These stocks that you see on the stock market, the stock market's going to close on the weekend? You can't shift. It's just like the bank, right? You can't come get your money out of the bank on a Sunday. And hey, if you want to take $100 out of the ATM, that's going to cost $5. 5% fee to get your own money from your bank account. Like it's old, it's antiquated. So we have digital commodities, we have digital securities. He also has this asset class called digital APT. So that's going to be for tokenized gold and oil and other types of commodities. So he sees a future where all assets are tokenized, priced in Bitcoin, and settled on the Bitcoin network. And part of that is the digital utility token. And the whole point of a digital utility token, again, is not to compete with Bitcoin as the reserve asset of the internet economy. No. That's pure stupidity. The whole point of a digital utility token is to empower responsible savers of Bitcoin, to give them utility, to deliver some type of calculable economic benefit for that person when they're using their Bitcoin within the internet economy. And that's what People's Reserve is all about. So I know we're going to dive into that, but just to answer your question on Ripple, I think they're missing it, and they're attaching themselves to the wrong narrative, and they have a chance to pivot from that narrative and play a big role in the future of the internet economy. And if they don't, they'll wither away into nothing.
I agree. You get a lot of flack. I don't know if you felt it, but I certainly do. As soon as you question the narrative of XRP, you're bombarded with a lot of hate and insults. And the example you gave is the engine. It's already been created. The analogy I use, and maybe you'd agree with this, is that Bitcoin invented the wheel, and then another one says, no, we're a better wheel. And it's like, no, the wheel is a wheel. It's round. It's there. And it's like, yeah, but our wheel is more round. And it's like, no, the wheel is already round. It's already invented. But expanding on what you said, supporting this concept of, let's say Bitcoin is the wheel, well, maybe you could support it by putting tires on it, or you could support it by giving it suspension, or support it by having an engine that moves behind it, as opposed to saying, no, our wheel is more round than your wheel. It's like, you've missed the point entirely. Yeah. Don't compete with Bitcoin. And the line that makes me cringe and crawl in my skin is like, we have a better Bitcoin. It just shows a level of perhaps ignorance or arrogance, or I would actually argue, CJ, sometimes predatory behavior. And what I mean by that is when newbies come in and they keep throwing this money at pick your coin. And meanwhile, Bitcoin is just up and to the right, up and to the right. And it's like, no, but mine's a better Bitcoin. It's like, can't you see the graveyard of all of these coins that have tried to compete with Bitcoin? Bitcoin Cash, Bitcoin Black, Bitcoin Diamond, Bitcoin Gold. It doesn't matter. There is only one Bitcoin, and it's called Bitcoin. Now, this leads us into your company, People's Reserve. We can see the problem. Jack Mallers said it during his speech. He said the hodler's dilemma, and I really like the way he put it. The hodler's dilemma is we've got this pristine asset, this asset that keeps going up, and we're told to hold on to this asset. But the hodler's dilemma is like, well, how do I hold on to this asset and watch number go up, but not take any profit out of it and enjoy the fruits of my labor? How does People's Reserve fit into this equation?
Yeah, and I love your wheel example, because that's really what People's Reserve is about. We're not even adding to the wheel. We think the wheel is perfect as it is. But when you take the wheel and you attach it to a cart, now you can actually be productive, right? If you just have a wheel, it's going to be really hard to move that dirt from one spot to another. But you take a cart and you attach it to the wheel, now you can be productive. Now you can move that dirt. Now you can get the job done. And that's what we want to do for Bitcoiners. We want you to be able to recognize the purchasing power of your responsible saving without giving up ownership. So we've developed the what we call Bitcoin-powered finance tools. And these Bitcoin-powered finance tools, like our Bitcoin-powered mortgages, help you unlock the purchasing power of your Bitcoin without being forced to give up ownership. Now, you know this story because we've known each other for a while, but maybe some of your listeners don't. And if not, some of the new listeners will hear this for the first time. You know, back in 2019, I bought a single family home for 100 Bitcoin. And people ask me all the time, like, you knew Bitcoin, you're at the bottom of the bear market. Yeah, but I had a wife, she was pregnant, and yeah, that's all you need to know, right? So I need to buy a house. And I bought the house with my Bitcoin because it was proportional to my savings. It made sense. There was no way I wasn't going to do it, because it was going to increase the quality of my life and the standard of my living. And it was going to increase the security for my family and for all of our experience. And today, you know, I walk into my $10 million house and it's only worth less than $500,000. So, you know, you don't want to get in that situation. You don't want to be in a situation where you're forced to spend your Bitcoin in order to increase your quality of life and standard of living. You don't want to give up generational wealth to purchase a house that's only going to last one generation. You need the financial tools. You need these financial tools to leverage the purchasing power of your Bitcoin without having to give up ownership. And that's the cart. These financial tools that we are attaching to Bitcoin, that we're building around Bitcoin. See, People's Reserve only exists because of Bitcoin. We're not competing with Bitcoin. We're complementing Bitcoin. We're attaching our cart to the Bitcoin wheel, and these financial tools allow you to now be productive, allow you to take advantage of your responsible saving, open up doors and open opportunities, not only for yourself, but for businesses as well, to get exposure to Bitcoin, because businesses really need exposure to Bitcoin bad, because they're falling behind and they need to get employees and need to pay them more, and they need more equipment, and the equipment costs are going up. Quality is going to crash in your company if you don't embrace Bitcoin. Quality and standard of living are going to crash in your life if you don't embrace Bitcoin. Bitcoin is the solution. Bitcoin is the engineered money. And when we build around Bitcoin, now these solutions that we've built actually deliver real value. They deliver real calculable value. And this past weekend at Bitcoin Day Tampa, we announced that we are launching, according to Michael Saylor's digital asset framework, a digital utility token. And some people were like, what? CJ, you're a Bitcoin maxi. Yeah, you're damn right I'm a Bitcoin maxi, because Bitcoin is money. Nothing else is money. Nothing can compete with Bitcoin. And anything that does try to compete with Bitcoin is a scam. Bitcoin is the wheel. It's the savings technology. Nothing else can do or will do what it does. End of story. Bitcoin Maxi. So what's the point of your token? What's going on here? Well, there's 2 points: loyalty and liquidity. So Adam, as somebody who's been in this market for a long time, I know that you've dealt with the exchanges, and none of them have, I mean, some of these exchanges have made hundreds of thousands of dollars off of me over the last decade. And the guy who signed up last week is paying the same rate and fee as me. Like there's no benefit to my loyalty to them at all. It's just complete value extraction. It's fiat maxi value extraction to the furthest extent. And because they've earned more off of me over the lifetime of the customer, they'll use that customer lifetime value model and say, well, we don't care if we lose him as a customer. We'll go get new customers. And that's what's going to power the model, because we've made above average money from him anyway. We're done with him. There's no loyalty. It doesn't go both ways. It's a fiat maxi mindset instead of a relationship maxi mindset. So that's number one. We don't want you to have to come to People's Reserve and work with us for a decade to establish loyalty. You can establish loyalty on day one by buying the token. And when you buy the utility token, it comes with calculable economic benefits. So number one, it's about loyalty. And then it's about treating loyal customers like royalty. Well, how do we treat you like royalty? By giving you the best industry, by far the best rates in the industry, and it's not even close. The lowest rate you can get on our Bitcoin powered mortgage, if you are a diamond level loyalty member and you over collateralize your mortgage loan, is 3.5%. The US government is paying 4 to 4.5% to borrow. Do you know what that means? That means because People's Reserve has created this cart and attached it to the wheel, you, the responsible saver of Bitcoin, are now the risk-free borrower in the marketplace. You, the responsible saver of Bitcoin, now have access to the cheapest cost of capital in the world. So what secures the fundamental value of the token? The calculable economic benefit between the difference of borrowing at 10.5% and borrowing at 3.5%, or going to other people in the industry and borrowing at 12 and 13 and 14 and 16%. The difference in your interest payment, the difference in the level of interest accrued over the life of the loan, that is the calculable economic benefit of a token that gives you utility, and that utility is savings, and that savings helps you increase your quality of life and standard of living. It helps Bitcoin evolve from digital gold to pristine collateral, and it empowers the responsible saver of Bitcoin with economic benefits. But number two, it's about liquidity. And this is where people get a little mixed up. They're like, yeah, but why do you need a coin? Isn't there another way? Yeah, but look, guys, every other person in this industry is going crawling back to the TradFi bros, going crawling back to the cantillionaires, on their knees for the cantillionaires, just begging them for a credit line. Can you please print money and let me borrow it at 7% so I can go to my customers and lend it to them at 12% and at 15%. And if you have $10 million of collateral, I'll give you 9%. But please, 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 cantillionaires, print some money and let me borrow it from you. Wait a second. What? That doesn't make sense. You want to go back to the fiat system and beg them and then use a fiat maxi arbitrage mindset to your customer so that you can profit on the difference between your borrow rate and their borrow rate? How do you establish a free market yield curve that's not stated and anchored when you are going back to the fixed, stated and anchored yield curve to create liquidity? It doesn't exist that way. So the second part of the token is about liquidity. We, the people, are the only people that can help we, the people. The cantillionaires are not going to help we, the people. The TradFi bros are not going to help we, the people. The fiat maximalists are not going to help we, the people. Look what they've done. They've extracted value. They've abused you. They've created a debt slave system. You don't go back to the slave master to ask if you can run away. You break free. And how do you break free? With new systems, with innovation. And that's what we've done. And I like to say it this way. Imagine Michael Saylor. He has access to U.S. capital markets. He uses that access to U.S. capital markets to raise funds, and then he buys Bitcoin for his company. Okay, well, People's Reserve is doing the same thing, but in the internet economy. We're creating liquidity, but instead of using that liquidity to empower ourselves or to buy Bitcoin and put it on our balance sheet, We're taking that liquidity and we're lending it back to you, the responsible saver of Bitcoin. So why do you buy the token? Number one, to get the loyalty benefits so that you can have calculable economic benefits when you're using your cart. When you're using Bitcoin and financial tools in tandem with Bitcoin, you are the risk-free borrower. You have access to the cheapest cost of capital, and not just for our mortgage, but for our whole suite of products. You get the diamond benefits. You get massive economic benefits across every single one of our products and services, including our stablecoin. So that's why you buy it, for the loyalty level. But why is the second reason you buy it, and maybe even the more important reason? To provide liquidity to yourself. Because we take that liquidity, and instead of putting it on our balance sheet or putting it in our pockets, we create a reserve of money for we the people. That's where the name of the company came from. People's Reserve. What is it? It's a reserve of money by the people and for the people. We create liquidity, and then we take that liquidity and we lend it back to you with zero cost of capital. We didn't crawl the cantillionaires to pay them 7% so that we could charge you 10%. We sourced it from the internet economy so that we could make you the risk-free borrower, so that we could give you the cheapest cost of capital. And I believe this model is going to accelerate. I believe this model is going to prove itself, because we the people need to support we the people, and people get that. They understand that. And by the way, we're not just going to do it in decentralized finance. We also, at People's Reserve, as a US regulated company, are in the process of trying to complete a reverse merger with a special purpose acquisition company, or a SPAC. And when we complete this process and we get access to US capital markets, we will also pool liquidity from US capital markets with zero cost of capital. And we'll take a small portion of it and put Bitcoin on our balance sheet, and we'll take a large, vast majority of it and plug it right back into the People's Reserve Fund. And then that fund creates the liquidity that Bitcoiners can draw from at the cheapest cost of capital as the risk-free borrower in the marketplace. This is how you develop a free market yield curve that is not stated or anchored. A free market yield curve that's based on the supply of money, the demand on loans, and the perception of counterparty risk. Well, as the responsible saver of Bitcoin, when you post Bitcoin as pristine collateral, there is no risk. When you post Bitcoin as pristine collateral, you are the risk-free borrower. And People's Reserve is passionate not only about helping Bitcoiners unlock the purchasing power of their savings without giving up ownership, but also in establishing the true free market yield curve of the internet economy. This is true financial freedom, a future where the price of money is not dictated by a small group of men, but instead is dictated by the wants and desires and the responsible saving of we the people.
Is this product available to everyone globally? And if so, how do they reach out to you? How do they start?
Yeah, so our mortgage product is only going to be available here in the United States. So at first, we're starting in the United States. We are working on going international with the mortgage product, but our other suites of product are going to be available around the world. And on July 4th, we're going to have our token sale. But July 4th is We the People Day. It's Independence Day in the United States of America. But this Independence Day is going to be about embracing financial independence and financial freedom. And anybody in the world can participate in the token sale. That's the power of the internet economy. And when you get those tokens, you're going to be able to establish your liquidity, establish your loyalty level, and establish liquidity for the People's Reserve so that we can turn around and lend to you at the real risk-free rate, at the real rate that empowers you instead of extracts value from you. And the savings that you get from that process is going to add up tremendously. And one last thing I'd like to add here, Adam, no matter where you are in the world and whether you embrace our loyalty program or not, you still are going to get the best rates in the world. Our rate starts at 10.5%. If you over collateralize your loan by 200%, in other words, you need 1-to-1 to initialize. So if you want to buy a $500,000 house, you need to put down $500,000 of Bitcoin. But if you want to buy back interest points and get the lowest rate in the world, you over collateralize by 200%. So you buy a $500,000 house, you post 1.5 million of Bitcoin, you're going to get 3.5%. So there's nowhere in the world that you're going to get that at all. The government isn't even getting that. But even if you say, you know what, this token isn't for me, I don't really believe in CJ or what he stands for, but I do want to try out his services because it's still a good rate. Even at the basic level, at 10.5%, you can over collateralize and knock that down to 6.5%. So here in the United States, the prime interest rate is 7.5%. So even with no loyalty and no token, you're going to get prime minus interest rate. You're going to get an interest rate that only the most qualified people in the world are able to get right now. So whether or not you embrace our loyalty program or not, we're still here to empower you. And we believe in the long run, as the business model proves itself, and we pull from decentralized finance markets, and we pull from US capital markets, and we continue to increase the reserve of money to be deployed for we the people, the bells and whistles are going to go off. The light bulbs are going to click, and it's going to be common sense that we don't just need the wheel. We need to attach the cart to the wheel, because that's going to allow us to get the job done.
Outstanding. I should tell the audience I'm not being paid for this. CJ and I are friends. We met through our Bitcoin journey together. I'm very passionate about Bitcoin, as is CJ. CJ's taken it to the next level by providing a product to the market in support of Bitcoin and all of you out there. CJ, I'm so impressed with what you've done, how far you've come, where you're going. If people want to learn more from you beyond your product, have you got any socials you can share with us?
Yes, absolutely. So number one thing is go to peoplesreserve.com and sign up for the newsletter. That's where you're going to get all of the information. If you're interested on my views on life, macroeconomics, finance, follow me at CJ Konstantinos on X. Of course, you can follow at People's Reserve as well. And I'm on there every day. I'm super active. I try to interact with everybody. So if you comment on my stuff, I'm going to interact with you. And I'm sure we can learn from each other. That's what's been so enriching about my experience in Bitcoin. There are just because you don't have followers on Bitcoin doesn't mean you're not a gigabrain. It just means that you didn't have the free time to go ahead and do that because you're off doing something else. So I try to treat everybody the same, and I want to learn from you just as much as you want to learn from me. And the best place to do that is definitely X. And of course, Adam being one of the core people who pushed me to create a YouTube channel at CJ Konstantinos on YouTube, where you can see interviews like this and other content that I put out, trying to help educate people to get them to take the orange pill and understand, if you want to get ahead in life, you have to use Bitcoin as your savings technology. And then if you want to be empowered by that savings technology and not be faced with that hodler's dilemma, then sign up for People's Reserve, because we're creating the financial tools that'll let you attach the cart to the wheel and start to get ahead in life. Thank you so much for having me, Adam. It was an absolute pleasure.
CJ Konstantinos, thank you so much for joining me.